What's going on, guys? It is the Zoomer Value Investor here to talk to you guys today about what I believe are 6 stocks here in the month of March 2023 you guys should be adding to your watch list. Without further ado, let's get right into this. First stock I'd really like to talk about is Google. I'm sure you guys are probably familiar with this company. You guys probably use the search engine. You guys are on that website right now. YouTube, a company owned by Google, they acquired for $1 billion, I believe over a decade ago. And that return on investment has been quite remarkable for Google. And Google, of course, is just a great tech company that's great at investing in products and making a return on their income and producing cash flow. That's why I'm interested in the business. So I believe today Google is at a great value. I was a buyer of Google all the way down to the lows of low 80s that we'd seen a few months back. Acquired some shares at that range in the YouTube portfolio actually as well. And yes, I do believe here in the month of March 2022, Google is finally back into a buying range, so I'm including it in this video. In the 2023 rally here in January, February, Google actually did run up well with the SPYs. Google all the way up to price above $100, but it's actually fallen back for a kind of what I believe is a little bit of a silly reason. So yes, everyone's familiar with ChatGPT, the company OpenAI. They were acquired by Microsoft for a range of $10 to $15 billion, and now everyone's starting up again with the chatter of the AI wars. What happened to Google was they debuted a bot called Bard. Now Bard was a prototype, and at a conference, Bard had a little bit of inaccurate information, just kind of misled data that was slightly inaccurate about things like astronomy and of that nature. Quite an obscure topic with only a very few amount of experts, kind of easy to get information wrong in a field like that. Now, because this, a lot of people lost faith in the Google stock as a whole because they were just convinced that, hey, Google's going to lose an AI, AI is Google's thing, this is happening, what's wrong with Bard, sell it off the stock. That's such a closed viewed mind on what's actually going on in the bigger picture of things. So Google's actually sitting on a mountain of data. Bard is just a prototype. I really believe this is a very overblown whole story, and that Google does not deserve to trade at $90. I personally believe it's $140 or $150 stock, and that's what it's worth today. And keep in mind, you are buying into one of the greatest moats in the world in search. They are by far the greatest leader in search. They are also what customers do like is search. Customers do show an affinity for using Google search over other searches like Microsoft's Bing or Apple Safari, as well as Google Chrome seems to be another thing that customers and the general public seems to show an affinity for. And Google Cloud is a rapidly growing platform that is producing cash flow for Google. Well, Google's still investing more into the Google Cloud than the cash flow it's actually producing, but it's on trajectory to produce a positive net profitable cash flow in the next couple of years. Keep in mind the compounded annual growth rate of cloud for the next 10, 20 years is looking very nice and looking like it's definitely going to be a strong growth sector. So the fact that Google's getting this business, the Google Cloud, up on its feet here in the year 2023, 2024, it's going to be in profitability, I think that's quite a feat, and on top of an already impressive business. So yeah, I do believe there's a lot of reasons to remain bullish on Google, on top of the Android phones, which is a dominant operating system in the phone market. Again, very close mind to the market to sell the stock off over 10% just over a very prototype AI error when the market should be smarter than that, know the amount of data that Google's actually sitting on. And this is just sending it back into a great business, back into a buy opportunity, and that's my view on things. On top of it, I really want to put it out there that ChatGPT, I've tried it myself, of course, and I, like a lot of other people, have found that it's just kind of a bit of a BS expert. It's of course an impressive platform, can produce an incredible amount of content very quickly by scanning the amounts of arrays of the internet, as well as I believe ChatGPT 4 is going to come out soon, which will have more paddles and more accessibility to different varieties of data, and maybe be 3 to 4 times stronger is what I'm understanding. However, just keep in mind that, again, this is being a bit of a BS expert. It just, as impressive of essays and what all it can write, if you ask it a specific valuation and investment questions and whatnot, it can kind of look up these like vague metrics and stuff on like Yahoo Finance and whatnot, but it simply cannot produce just a realistic, tangible like investment thesis the way like a human could, or it just, to me, really comes across as like a BS artist. And you could try it in a variety of different like fields. just trying to talk it like a human and get back that human expertise. I just genuinely believe it's not there for ChatGPT. But yeah, again, it is an impressive functional app. Yeah. Hopefully if Microsoft gets in like the $220 a share range, I can put Microsoft on this list for a month and buy that business. What an incredible business that is as well. Personally, I believe that the outlook for the next decade is that there will be a good amount of the big tech still dominating. And I believe that, yeah, there's probably a high likelihood that it will be an oligopolistic type situation like we are seeing now today, where both Google and Microsoft are still around, still giants, actually probably significantly bigger than what they are now. With Google and the Android phone market, I really want to talk about this next stock, Digital Turbine. This is about a $1 billion market cap advertisement AI company. They have a very nice digital advertising business. It's kind of directed to consumer. And I think they have an impressive amount of kind of patents and things that kind of moat them in, and deals. I think that's a key thing, is just having deals with clientele. Really impressed me with this business. One thing I really point out, I think is really cool about this business, is they do what I believe is called the AAID. It's the identification that goes into Android phones. Personally, when I look at the business, I think it's really cheap here, around $10 a share. I think it's a great time to get in and look at this as a opportunity to get involved in kind of like a small cap. Again, this is one of the highest risk stocks I've ever talked about on this channel. I'd say the only one that blows this one out of the water would be CleanSpark. If you guys want to check out my videos on a stock called CleanSpark. Digital Turbine is a bit in that situation where a bigger mover could come in and just swoop up their whole market with just how small of a market cap there is, and it presents that volatile risk, that high risk, high reward situation in the stock market where you're betting on a small cap stock. That just is an inherent nature of doing that activity. However, I think Digital Turbine, I think they have an impressive moat here, an impressive amount of deals going out years on end that they keep renewing with clientele, and clientele seem very happy with their business, and I'm really impressed with their ability to produce cash. I think this is a business that will grow into its valuation. I would start looking to sell this one. If I'm buying it today around $10, maybe around $25, $30, I might start scaling out the position, but again, let some winners run. That's kind of my philosophy with investing. Next company I like to talk about is Hasbro Inc. Now, Hasbro, it's a company I actually released a full due diligence video on. It's about 16, 17 minutes long, if you'd like to check that out. And I just really want to just mention in this video the gestalt thesis. You guys are buying into an entertainment empire here with Hasbro at about a $7-8 billion valuation. Incredibly cheap. I mean, just for scale, Disney is, I believe, around like a $150-180 billion market cap company today. And, Hasbro has a ton of IP, and it also just financially, with the per dollar assessment of the valuation of the business, the per dollar cash flow generated, Disney just trades at like a much higher multiple than Hasbro. And again, like Hasbro is sitting on a mountain of IP that I believe that the market hasn't really given credence to. And part of that has to do with a current kind of, now there is a controversy going on in the Magic the Gathering community. Essentially what is going on is Magic the Gathering is a card game that is owned by Wizards of the Coast, which is owned by Hasbro. But again, you think about like Transformers, all those Transformers films that are out there. You think about things like Peppa Pig, My Little Pony. You think about Mr. Potato Head. You think about Dungeons and Dragons. You think about Monopoly and the Parker Bros board games like Battleship and whatnot. I mean, Hasbro is a toy company, kind of like in a Frankenstein aspect of the business. Toy company, low margin business, no more than maybe like a 10% margin business, right? But then you think about Hasbro monetizing its IPs further. Transformers films, online Monopoly video games, online monetization with casino online companies, using the Monopoly IP and Hasbro collecting royalties off that. This is a very exciting business. I believe here around like $48 per share. I believe it has room to double within 2 to 3 years here. I believe Hasbro very well could be a $100 stock. It has been a $100 stock before. I think it will do it again. It needs a couple years to get its situation reassessed with both the economic macro, needs to kind of reset in a cyclical sort of manner. That's what I'm betting on. As well as the other thing is I'm betting on that a lot of the things with the Magic Gathering community will be resolved. These are resolvable issues with Wizards of the Coast and the community. At heart, I know that people love to play Magic, and I'm willing to bet on that. The next stock I really want to talk about is Moderna. I have some great content about Moderna here on my channel. One of my favorite videos is a video that directly compares two mRNA research companies side by side, BioNTech and Moderna. And fundamentally, the conclusion I came down to is these are both really great companies. I believe BioNTech maybe has a little bit more of a team that I'm a little more interested in the long haul with, as well as I believe BioNTech is maybe a little bit more shareholder friendly. However, I believe that the pipeline, the more immediate pipeline of drugs coming through the Moderna pipeline is a lot more attractive than BioNTech, because BioNTech's pipeline, I don't really see many interesting drugs coming out until the 2024, 2025 type of time. So personally, I scale my portfolio around like an 80-20 split. I'm about 80% into my mRNA holdings with BioNTech, about 20% with Moderna. However, I believe Moderna's at a great value. With a lot of the macroeconomic downward pressures we've been seeing in the markets lately, it's honestly sent Moderna right back to a great value where I feel comfortable to start accumulating the stock again. Our next company is Hanes. Hanes is most famous as a clothing and innerwear brand. If you guys ever go to the Target underwear section, you cannot miss Hanes products. So basically, Hanes is in a situation where, you know, with the macroeconomic trends and how management kind of played it, they really honestly mismanaged pretty hard, and it sent the stock to a low it hasn't seen in years. Buying shares of Hanes for $5 honestly feels like a steal in the long haul. I really see this thing back at around a $15 stock within a couple years. The brand has just won over the consumers' minds way too much when it comes to Hanes, as well as it still is fundamentally a great company. Just because of some management mishaps, I don't see them back on the road to success within a couple years. I'm definitely willing to buy into this and give it some time to play out, willing to buy it if it goes any lower. I think it's a great company for the long haul. So yeah, my plan is to maybe start to sell some holdings, perhaps around $15. I believe that's around where the intrinsic value of the company is. And after I trim around there, you know, let winners run. I also don't really own a lot of apparel stocks. This is probably the one like apparel stock I do own, so it's a great time to really just diversify out my portfolio with a stock like this. I mean, you guys always see me, the Zoomer Value Investor, talking about these crazy tech stocks or these crazy med tech stocks here on the channel. You know, and I talked about in my last portfolio update how I'm really trying to diversify out my portfolio, and I think Hanes is an amazing stock here to accumulate. The next company I want to talk about is an expert in chemistry. I'm talking about Celanese. I believe here around $100 per share mark, Celanese is a great value. I of course would love to buy the stock anywhere lower. It has a recent low of about $88, $80. I for sure want to put in a hefty order if it retraces back there. Of course, all this is on no news change. As value investors, we just like to buy stocks the lower the price they go. If no major negative news is coming out about the business, that's an opportunity we value investors love. Celanese is a company I'm very excited for. It's at historically low valuations, a PE around 6 on this one. It hasn't seen valuations like that in over 5 years. I think it's a great company. You're talking about a chemistry solutions leader. Talking about a company that makes things like acetic acetate. You're talking about things like making polymers, making monomers. Again, a great company. I like this one because it's more in the basic material side of things. You have seen some basic material stocks kind of sell off, and a lot of that is the economic macro. You know, with the market trying to like price in this like pseudo recession or whatever the heck's going on with all these things happening in the modern markets. But of course, with like a long-term oriented investment, I think that this is incredibly attractive. I believe this should be around $160, $180 stock. And of course, we let winners run on this one. I think Celanese could be a great company for the next 10, 20 years, and I'm only buying it for a couple $1 billion. That's of course the market cap price tag. I'm not actually throwing billions of dollars at this company. I'm buying shares. Ladies and gentlemen, with that being said, those are 6 stocks that I personally am looking to accumulate this month that I really think you should put on your watch list here in March of 2023. Thank you guys so much for watching my video. Please leave a comment if you enjoyed. I'd like to hear your thoughts on these crazy markets at this time. Peace.